So we talked about using seller concessions as a negotiating tactic when purchasing a home to get a better deal. So we felt it important to explain exactly what seller concessions are. What they are, they're the sellers using a portion of the proceeds of the sale of their home to help cover your closing costs, prepaids, taxes, stuff like that. So I wanted to explain to you the maximum amount of concessions you can get for each particular type of program. Once again, what it does is frees up more money for you. You don't have to bring as much money to closing, and it will help you save money immediately as opposed to asking for a price reduction, which will only save you, for $5,000, only saves you $30 a month. So let's talk about the maximum concessions you can get. For an FHA loan, the maximum concessions is 6%. Pretty difficult to actually use all of them, especially for larger loan amounts, but sometimes on the smaller ones you can actually utilize that. For USDA loans, same amount, so that works out great for you. For conventional loans, there are tiers based on how much you put down. So let's talk about that. If you put less than 10% down on a conventional mortgage, the maximum concessions is 3%. If you're putting between 10 and 25%, the maximum concessions is 6%. And if you're putting more than 25% down, the maximum concessions on a conventional loan for a primary residence is actually 9%, which is a huge number. What does that even mean? So let's look at the 3%, which is the most common for a conventional loan. In our area here in Michigan, the average sales price is right around $350,000. The concessions is based on that price point. For easy math, let's say we're going to use $300,000. 3% concessions means that they're out of their proceeds of the sale of their home, they're giving you $9,000 to help cover your closing cost and setting up your escrow account, prepaid, stuff like that, tax prorations, those items there. Sometimes you don't have that much available to even cover, so what you can do is use those concessions to be able to help buy the rate down. There's a couple other things you can do. They cannot be used for your down payment, however. You have to bring those monies to closing. Now, the final category we want to talk about is actually on a VA loan. VA actually is unique in the fact that they have several rules. In some situations, you could actually use concessions to help pay down debt, to help cover and help you be able to qualify more. So that's a whole nother discussion, and they have additional rules, which is great for our veterans. Guys, if you have any other questions about this or anything else, let us know. Follow and like for more tips.